Hey everyone, Couch Investor here, back with another Lemonade video for you today. So remember when we said that Lemonade takes a flat fee of 25% and that the rest of the unclaimed money goes to charity of your choice? Well, apparently we've missed something, and that could mean that Lemonade has a max take rate of 60%.
Say what?
And here is how. Alright, but before I get into this video, I'm doing a special project with my subscribers. Basically what I'm doing is I will be recording a video at the end of the month with all your price predictions of your favorite stock, and I will schedule the upload just 1 year from now, and we will see if we've got our price target correct or not. So basically, if you want, you can write down in this comment section below what your price targets are for your favorite stocks, or go to the community post specifically for that. And if you haven't subscribed to this channel, maybe hit that subscribe button. We're trying to reach 5,000 subscribers by the end of the month. And if you like these videos, leave it an early thumbs up, as it really helps me out grow the channel and get my videos out there. All right, so now let's go back to that 25% fee that Lemonade is taking. All right, so as you know, they take a 25% flat fee. So the remaining 75% goes to reinsurance agencies to fulfill user claims. Now, let's say a user has no claims whatsoever, then 40% goes to a charity of their choice. You can see it right here. And obviously now there's 35% remaining. That means that 35 plus the 25% flat fee that Lemonade takes at the start turns into a 60% fee that Lemonade actually inherits from that one user that had no claims. Now you might ask, why only 40% goes to charity and not the full 75%? To be honest, I still have no answer for that. I'm trying to look into that. If some of you know, let me know down in the comments below why they cannot exceed 40%. In my opinion, I think they will probably up that percentage as they grow and as they rely less on the reinsurance agencies. Right, so let's go back to that 60%. Eventually, I think 60% will be the ceiling no matter what, even if they cut the middleman, the reinsurance agencies, etc. I don't think they will exceed those 60%, but still it's tripling what we thought that Lemonade is actually taking right now. Initially, we thought it was only the 25% flat fee, but now eventually it can be up to 60% of the fee of one user. Another thing I wanted to mention in this video, a lot of people have been asking me, what about the bad income statements? So one of the reasons is that they are currently not recognizing revenues due to reinsurance and accounting policies. Obviously, I don't think that will stay like this for the longer term, but right now we all know if you invested in Lemonade, profitability is not going to be here in the short term. In the long term, obviously, we would like to see profitability, but as of now, the only thing I'm focused on is growth numbers, growth in premiums, growth in earnings from premiums, growth in users, and obviously growth in policies offered. All of this will eventually improve the margins, but as of now, I'm not looking towards profitability. I'm looking toward growth, and eventually profitability will follow. Now, one of the ways that is going to happen is from this little article right here that was brought to my attention. Basically, it says that in July, 52% of young adults resided with one or both of their parents because of the pandemic, because of maybe they don't have a job, college is from home, Zoom classes, etc. Why should they pay rent and move out? Which means that eventually when the pandemic is over, hopefully sooner rather than later, those or a big chunk of those 52% are probably going to move out of their parents' apartment, go back to their jobs, different states, go back to their colleges, etc., which would mean that they need insurance, whether that's homeowner, renters, pet insurance, maybe they will be adding other policies, etc. But just so you know, this is an interesting thing that was brought to my attention. I think it is to be taken into consideration. Now, before I end this video, let's quickly look at the graphs. All right, so as we can see here, between $47 and $50 are all the buying areas I was buying when the stock was pretty low. Now we can see here, I think in my opinion, once we break $55, the stock might go back up above the $60 mark, but as of now, it's a pretty big resistance. So we might need one huge candle to break that resistance point. Overall, I think right now what we could see is the stock go a bit sideways, maybe test it again a couple of times, that $55. And if it goes back under $50, I might even add a bit more, even though my position right now is pretty big. All right, and that will be it for this video. As always, I'm extremely bullish on Lemonade. I know this is a very long-term play, so if you're in it for the short term, it's not the right stock for you, especially not now. So you might go and check it back in 6 months or so. But for us long-term investors, I would like to see growth. Earnings report is coming up, I think, in the next month or so. So be on the lookout for that. Obviously, I will be covering the earnings report. And as always, guys, if you like these videos, leave it a thumbs up. And if you haven't subscribed to this channel, hit that subscribe button. We're on our way to 5,000 subscribers. Let's try and reach that at the end of the month. And if you want to participate in the special project, write your price predictions for your favorite stocks in the comments below or in the community post. As always, guys, take care, stay safe, and see you all in the next video. Bye bye.